go through it because I think you have already seen it a lot of times on my website and web page and Zero to Hero. But for those who are starters, and if I'm going fast, don't worry, because this all is getting recorded and it will be available to you for 3 months and some more. So benefits of option, of course, it gives you leverage, it gives you portfolio hedge, it gives you effective risk management tool, enables to trade high price markets, becomes a regular source of income, right? This is exactly what I've said in the webinars also. The main thing is regular source of income, which I just mentioned, that writing option is the key. Essentials of option, that what is a call? Call is like you have to, when you are bullish, you buy call. And when you are bearish, you buy a put. So here there is a transaction which is always a buy if you have a view. So view means bullish view or bearish view. Now, when you buy a call, somebody is going to sell it, right? So he's a seller of an option and you are the buyer of an option. The buyer of an option pays the premium, which is this, means it's like, let me tell you something like, I give this example in seminars that you have heard about lottery. When you buy a lottery ticket for say 100 rupees, you pay the price of the lottery ticket. If the number comes, there are different numbers. If a smaller number comes, you get 100 rupees. If a bigger number comes, you get 1000 rupees. If a much bigger number comes, you get 1 lakh rupees or 1 crore rupees. But if nothing comes, you just lose 100 rupees, which is the cost of the lottery ticket. Exactly is the premium. When you pay the premium, you are buying a call. Of course, we are not buying on lottery ticket like a luck. We are using some strategy. I just use that as an example. So in case you go wrong on the option, your only that premium amount goes, whatever you have paid. And in that also, we are going to have some stop loss. So it's not that you lose everything what you bought for, right? We have a stop loss for that. And the premium, that's the premium you pay. And then there'll be different strike prices, which level you want to trade. I'll show you each of them in a while. Intrinsic value, time value, and implied volatility, which we don't want to deal with. So this, let's start with the call part. Now, if you don't understand this, I have 1 hour basics of call and put, which I am explained in detail, which will be part of Zero to Hero program in your membership site. But just I want to get some basics clear. A call is a option to buy a security. Now, this is all technical terms. Like we generally use that I'm buying a call of 11,800 or 12,000 Nifty or 12,500 or 31,500, 30,600 and all that. Different strike prices and different premium prices. Call is when you buy call, you are bullish. Simple. Remember that much part first. And what is a put? Is when you want to sell a security and that time you are bearish on the market and you buy a lower strike price put. Like I'm bearish on the market right now, so I'm going to buy a 11,300 or 11,200 put, which is, that means I'm buying a lottery ticket which is bearish. And if I'm right, I'm going to make money. If I'm wrong, I just lose the premium of what you can say here, 42 rupees into the lot size. Lot size is how much for Nifty? Which is 75 shares, right? So then we have option. This is the main thing which I teach in every program. This is the textbook thing, which is very complicated and not useful, but this is the simplest one which we use always. Malkan's view options view matrix, which is when you buy call, you are bullish. When you buy put, you are bearish. And when you sell a call, you are not so bullish. And when you sell a put, you are not so bearish. So this is, now let's look at one chart on Nifty. And at least you need to know one parameter. Now, in our case, let's say it's RSI. So we work on RSI, but you may be working on trend lines. You may be working on moving averages. You may be working on MACD. Then you have to have one view out of the 4. And that will always be there. If I ask you what is the view on Nifty right now, so you'll say, okay, bearish. Because why? Because RSI is below 40, right? So let's take an example. I know some people who are advanced, they will find it, oh, so basic. But then I have to go with everyone, right? Some people don't even know what is call and put. So have patience, right? Don't worry. Advanced people will have popped the eyes after session 3, 4, and maybe 5. That time they'll be like, wow. And basic, everything is wow for you right now, right? So this is, if you look at this Nifty, which is below 40, so I'm bearish. So what do? Buy a put. Now, when Nifty is between 60 At resistance, when I say, okay, I'm not bullish on the market because it is a resistance, that's when I sell a call. And when Nifty takes support on 40 in the last few days here, that time I say I'm not bearish on the market, so I sell a put. So sell call, sell put, buy put, and here when Nifty is clearly bullish, that's the time I buy a call. So all four conditions are here. Now every situation, let me, if I change the chart using simple daily RSI, what do I say here? Based on RSI, I am not bullish because it's not going above 60, right? If I look at Maruti, what do I say? I am bearish. That means I buy a put. Then let's look at UPL. So I'm not bullish and neither bearish, it's sideways. So I can sell call, I can sell put both. Let's say if I do Tata Motors, based on RSI, it is bearish. So I buy a put. Then if I look at, say, Wipro, I am bearish, I buy a put. Simple, right? Simple analysis, simple stuff. You don't need to go much in detail about why call and why put. You just need to have one view. So whenever you want to trade options, you will look at the chart and first derive the view. What do I think about this chart? Is it bullish, bearish, not bullish, or not bearish? Then we will see, then you know what to do, which is to sell a call or sell a buy, or sell a call, sell a put, buy a call, buy a put. And then we'll talk about which strike price, right? And then we talk about which expiry. It's a weekly expiry or a monthly expiry. And then we'll see what is the stop entry price. Then we'll go into what is the exit price and all that. So step by step, slow and steady. First is the view, right? Let's do one more. Let's do Voltas. So bearish below 40. Let's do State Bank of India. Not bullish. It's not going above 60 here. Sideways. Let's do Bank of India. Not bearish because it's not going below 40. So I'm going to sell a put. If you can see, there's a support here, there's a support here, there's a support here, and there's a support here, right? So this is where it's so simple, right? Just making sure, just to confirm. Can you guys see the screen, and are you guys able to understand? This is very simple. All good? I'm just checking. Just, yeah. All right, great. Thank you. So let's go ahead. Okay. So this was the thing. The strike price is predetermined by the exchanges, and something like this. If you look at Nifty, this is NSE. If you go to NSE and say option chain, can you see option chain? So this is Nifty, 11,100, 200, 300, 400, 500, 600, and in between there is 11,150, 200, 250, 300, like that. This side is the puts, this side is the calls, right? And currently we are trading near, if you see this yellow mark, this is the yellow part, and here this is the yellow part. So this is where the market is right now, approximately 11,500 something. And then we'll go into check what is, we don't need to worry about open interest, okay? Change in open interest, absolutely rubbish, okay? Don't even think about it. So don't worry about what is open interest. Even I don't know what is open interest. So let's not talk about that. I'm just showing you the strike price, about what are the different strike price you can trade, okay? Now, in the money, at the money, out of the money. What does this mean? Let me say in terms of, let's say current market price is 10,900. So what would be the in the money? What would be the, and let's see this. Whatever is the current market price, that's always called as at the money, right? Equal to the current market price is at the money, right? And then if you are away from the current market price, which is 11,000, 11,200, that's called out of the money, which is away. So if I'm right now 11,500 is the Nifty price, and if I'm thinking markets will go to 12,000, then I'm talking about out of the money options or calls, right? And if I go inside, which is 10,800, 10,600, that means it also has some intrinsic value. Intrinsic value means whatever is the current market price and the strike price is lower than that in case of calls, that means there is some intrinsic value. Intrinsic means in the money. Intrinsic, in the money, at the same level, at the money, and away from the market, out of the money. This is for calls, right? If you are bullish. So let's say if you buy a call of OTM, it will be cheaper because you are talking away. If you buy ATM, it will be slightly expensive because you are near. And if you are buying in the money, then it will be very expensive because it already has some intrinsic value, right? Intrinsic value, because right now you're at 11,900 and you're talking about, sorry, 10,900, you're talking about 10,600. So 300 is the intrinsic value plus some time value, right? And for puts, it will be ulta, which is opposite, is your at the money remains same, the market price 10,900. But if you go down, which is 10,800, 10,600, that's called out of the money because you are bearish. For a bearish person, the lower targets are out of the money and the higher levels are in the money, which is 11,000, 11,200. Now we are rarely, very, very rarely going to deal with in the money options, okay? When we trade, okay, we are going to trade mostly at the money, and in some strategies we are going to trade out of the money, right? This video is getting recorded, plus there's a long video on basics of options about explaining in the money, at the money, intrinsic value, time value, which is already there in 0 to Hero, which is also right now actually on the free website called mboptionexpiry.com, where you actually registered for this program. So that's a much detailed video, and that's why we gave you so much of pre kind of videos so that you get prepared. So I don't have to spend that 1 hour teaching the basics and we straight away jump into the market. Although still, if you think that you just joined yesterday or today, you don't know the basics, and still you have a lot of time. Nowhere, if you feel, oh, this is too much, I'm not understanding, I'm not getting it, this is too new for me, don't worry. Don't worry, you have access to lots of videos which will explain you everything. You are not in a competition to make money. You are here to learn the skill. Once the skill is yours, you can make money whenever you want, right? So don't worry that you will see many people posting good numbers. I made 50,000, I made 1 lakh rupees from tomorrow onwards in the Facebook group. Don't feel missed out. Be motivated. Oh, they can do it, I can do it. So you'll take some more time, doesn't matter. It's okay, right? Just go slow and steady. Now, this is just a simple matrix. Now, first strategy, as I promised today, that I'm going to teach you option expiry special. How did I do those small trades, and which I want you to get practice. I would suggest that because I'm teaching you this strategy, which has minimum capital requirement, if you do 1 lot, which is 20 shares of Bank Nifty, will cost you like 2,000, 3,000, maximum 5,000 rupees to buy 1 lot of 20 shares. And then I will tell you the entry strategy and I will tell you the exit strategy. And then I will tell you where you can see the charts also, right? So I want you to start trading with smaller quantity, 1 lot, 2 lot, as per your capital, just to build the confidence. If you just push big button tomorrow morning with the help of this strategy and try to make big money and you stop out and you lose money, you lose more than the money, you will lose confidence, which we don't want to lose at the start of the program. So if you trust me as a coach, you need to follow me as a coach, and I'm going to give you instructions. If you follow the instructions, you will make money. If you don't follow the instructions, then I'm not responsible for your loss. So please follow the instruction. There is enough time to make money. Right now is the time to master the skill. Once you master the skill, no one can take that skill from you, and you are lifelong independent. My whole life from the age of 16 till today is a fight to be independent. That I don't depend on anyone to make money, because I've gone through those cases and those kind of situations when somebody is giving me the tip and I have no clue what the market is doing. Then it goes down. I can't blame him. Loss is mine. And I was feeling so bad, and I had to pay money from my pocket, and I got into debt. And I said, why did this happen? This happened because I was dependent on that person to give me the news and the views and the calls and the levels. If I do it myself, then I'm no more dependent. So I'm making you the same. You are not dependent even on me. You know your risk, you know your entry, you know your exit. You trade on your own. So no watching TV, no getting news, and no dependency. But first, master the skill, right? So first we'll start with the basics of RSI. I know you must have seen tons of video on RSI from me by now. If you're a regular follower of Malkan's View and Malkan's View YouTube channel and Facebook page. hundreds of videos I have done, and out of that, at least 20-25 videos I've done on RSI. In fact, all the trades which I did live in June, I explained the RSI concept every time I was buying and selling. So you already have an idea, but today we'll go into the specific, which is when to buy, when to sell, what could be the target, what could be the stop loss, right? First, understand the basics of RSI, which is a momentum indicator. Momentum means speed. It will tell you that the markets are going strong, means fast or slow, right? And speed is equal to distance upon time. When momentum's up, prices persist. Persist means keep going in that direction. And momentum is down, prices resist or reverse. They go sideways and they start coming down from the odd coming up. The trend changes when momentum is down. Momentum indicator is a trend anticipator. Anticipator means you are anticipating, or we can say predicting, that the markets will go up or go fast from here, right? So versus something called as trend following, like moving average. If you see, moving average is a trend following indicator. Momentum indicator is a trend anticipator, which tells you in advance that it's going fast, buy me, right? Now, it is measured through oscillators. All momentum is measured through oscillators, and there are various kinds of oscillators. Various kinds of oscillators, like there are banded oscillators and non-banded oscillators. What is banded means between 0 to 100. So RSI is between 0 to 100, so it's a banded oscillator. But if you look at MACD, it's a non-banded oscillator or a centered. Means it starts from 0, it goes plus, it goes minus, it goes plus, it goes minus. So it's non-banded. Now we are not going to deal with non-banded, we are going to deal with banded only, and that too only RSI, and couple of strategies using ADX. Okay, that is also banded. Now, types of price oscillators, volume oscillators, and breadth oscillators. These are the types of oscillators. Again, we are going to use price oscillators only, which is RSI is a price oscillator, ADX is a price oscillator. There can be volume oscillators, which will tell you whether the volumes are going up or down. But I don't use any volume indicators or volume oscillators. I just use plain volume. Maybe let me see if I can do a bonus video for you on volume. I think it is already part of your bonuses. So there is a volume video also. And you can even check my Tuesday technical talk. I must have done a video on volume for sure. And then there is breadth oscillator, which is very, very, very rare people use it. Breadth means, you know what, if you have seen CNBC or any other channel, on the corner, they say advance versus decline, right? How many stocks are advancing versus how many stocks are declining. Now, this indicator or this kind of data is only useful when markets are at the turning point from top or from the bottom. In the regular market, we don't need to see the breadth of the market. So if you look at what is breadth, sometimes we see markets are up 100 points, Nifty. But when you check the breadth, it says 1,000 stocks are down, 200 stocks are up. The breadth is negative, market is up. That means there is weakness in the market. Why? Because only few stocks like Reliance, Infosys are up. That's why the Nifty looks up. But overall 1,000 stocks are down. That's actually what happened in the last 6 months. If you see, Nifty is trading around 10,000, 11,000, 12,000, whereas the stocks have gone half and less than half also. So the breadth is negative, markets are strong. That's what called breadth. Now, I'm just giving you a basic information on all this. We are only going to deal with price oscillators, which is RSI and ADX in this program. Okay. Those who are already done, started a program, you guys are going to have a good revision of all the concepts. So it's a great thing to do options after start if you have done it that way. But if you have not done it, that's also okay, because I'm covering. That's why I'm doing all this basics. So if you are only doing option, still you will learn all the things. And then if you do star, then it will be a kind of icing on the cake, right? So conventional, when RSI was started by Welles Wilder long back, I forgot the year, it was like 1960s something. That's when RSI was invented. And the conventional usage, if you have seen so far, if you even go to websites and if you go to any software, they will use something called as 70-30. And they will use the word called overbought, oversold. And this is completely misunderstood and misused word in the market, overbought, oversold. So when we go into our way of doing it, the unconventional way of RSI, that's when you really learn what actually oversold or overbought means. Okay, that we will talk about. So one of the most popular tool in the market is RSI and MACD. These are the most popular. People talk either RSI or MACD because they are like Shah Rukh Khan and Amitabh Bachchan of Bollywood. and those are the famous guys. Compares the price to itself, so it's a price oscillator, and between 0 to 100, that means it's a banded oscillator. It's a 14 period is the default setting, which we don't mess up with. You know why that is 14? Most of the oscillators have 14 period, 14 RSI, 14 ABCD, MACD, 14 stochastic, 14 ADX. Many of them things are 14, right? You know, because there is 14 is the lunar cycle. And if you have heard this for the first time, then you'll be surprised. But my students know that we follow some part of planetary actions and time cycles, which if I have time and if you guys behave well, if you do great job, if you make a lot of money and make me proud, then I might give you one more bonus, which we have not given you so far, called time analysis. That we will see at the end of the session, right? If you guys do a good job. And I know you have the recording with you, but I would love you to be live on this class as I'm doing right now, rather than, okay, I'm going to get recordings, so no need to watch at 10 o'clock or 9. Do whatever it takes. Live is a different thing and video is a different thing. So if you attend all the sessions live, if you behave, if you trade, if you follow all the instructions, and if you make a lot of money and post it on Facebook, then I will give you that additional bonus, which can be a big game changer in your analysis, called time analysis. Okay, which we do in our Millionaire Trader program, which is coming soon. After this, we are going to do Millionaire Trader program very soon, right? So levels of 70 is overbought, levels of 30 is oversold. This is conventional. We are not using this. I'm just showing you what it is. And now we are going to use this 70-30. I tell you, I didn't make any money from this. Okay, and neither you can. Sometimes it works, but if you know how to execute this. So this is almost outdated stuff. Most people now use in India, thanks to Mulkan's view, is we use unconventional RSI, which is 60-40, which is called RSI bullish and bearish range shift. And now we use this range 40-80 for bullish, strong uptrend 60-80, downtrend 65-20, strong downtrend 40-20, and sideways market is 40-60. This is the crux. This is like a guru mantra. This is like the thumb rule of the market. This is what you have seen in my RSI video. This is what we have done in started a program. And that's the thing. If you understand this range part properly, then you know what the market is doing, which range it is trading, and then I know which side of the market I need to trade, right? So just you may note, I hope, I didn't tell you that, I forgot. One of the do's is to take massive notes, okay? Keep writing. I know some of you will be like clicking. I can see you guys. Some of you are clicking these photos like that. I can see you guys, all of you. You're clicking photos like this. I'll tell you, this phone, and you have like 2,000 pictures and photos here with all your birthday party and swimming and selfies and all that. In that you put this range shift, it will get lost. Okay. This is nuisance. If you want to store some good information, I suggest you need to have a good kind of a diary, like a Mulkan's View book or any other book, which you can use it and take spare notes, that RSI, star mark, and use today's date, 10th of July. I learned RSI. This is the range I need to focus on. And then writing, when you have writing, which is your finger, you know, your finger is connected to your brain. And that's why if you remember in school, they used to tell you to write again and again so that it gets into the brain. By watching here, and you take a picture, it is visual, right? You may forget, but if you write, it goes into your brain. So I suggest you write, take notes, whatever I'm saying. Maybe if you have not taken notes so far, maybe you can do it once the video is recorded, and tomorrow again do it. But now onwards, take notes as I'm saying all the nuggets and nuances of the market. It's called unconventional RSI. Now let me just show you. This is what we are going to use, 60-40. We would like to capture this kind of moves, right? This is above 60 and goes up like a rocket. Above 60 bullish. Between 40-60 sideways, that's when we write options. And below 40, strong downtrend, that's when we buy puts. So buy puts, sell call and put, and buy calls. This is the crux of it. Simple RSI. In 1 minute, I told you what you have to do is to check the view of the market. Now you go in any chart and see whether it's bullish, bearish, or not bullish, not bearish. And immediately you know what exactly how to do in options, right? Then we'll go into the specifics of option, right? Okay. Across the time frame, across any time, from 1 minute chart, 5 minute chart, 15-minute chart, 1 month chart, uh, yearly chart, quarterly chart, whatever you're saying, across the time frame, you're going to put 40-60 in your chart for the rest of your life, right? Very, as I said, if your basic softwares and websites still say 70-30, you know why? Because they're still following conventional. In India, if you see people using 60-40, then I could safely, I'm not like trying to boast about it, but I could safely say that if you see anybody using or teaching 60-40, except Dr. C.K. Narayan, then you have to safely assume that all of them are, most 99% of them are Malkanji students. Some of them will be acknowledging that they are Malkanji students. Some of them have maybe grown so big that they don't want to acknowledge that they have learned from Vishal Malkan. That's still fine. But once you hear them, the language which I use, most of them use the same language also. So that they also use the word star trader, and they also use the word option mastery, and they also use the word 5-star trade and 4-star trade, and still deny that they are not our students. But that's a different story altogether. But let's focus. They are going to focus on 60-40 for the rest of the program, for the rest of your life, which is very, very simple, right? Now we are going to get into expiry special level 1. Are you guys excited? It's going to be very basic. Now I'm going to talk about the basic level. This will be a very basic, simple entry and exit strategy. Then we will build on this as we go forward in session number 6 and session number 9, where we'll talk about pyramiding. If you have seen those testimonials, you know those guys, people make between 2 lakhs, 7 lakhs, 16 lakhs, 23 lakhs, 24 lakhs, and the biggest number I've seen is 1 crore 5 lakhs and 1 crore 72 lakhs in a single day using expiry special with some smaller tweaks with RSI, and then pyramiding, of course. So that, of course, that kind of big movement has to happen in the market, and you need that courage. I'm not saying you'll make 1 crore 72 lakhs, but that's the potential. And the same person was like a student like you, for the first time ever entered our class and got this done. Did not have the money to pay for the program. Okay, did not have the finance. He had to borrow money and do the program, and now making lakhs of rupees in every expiry day, right? So it is what's possible, but right now we are going only level 1. So I suggest you follow level 1 consistently till the 6th session when I teach you level 2. Don't try to improvise. Don't try to do anything silly or anything different, or try to outsmart the market or outsmart the system, right? The whole system means follow the rules. As my famous quote in my live seminars is no, you know what it is? Focus on the process, not on the profits. Focus on the process, not on the profit. The process is to identify the trade, to execute the trade, enter at the right time, stop loss at the right place, and exit at the right time at the right place. This is the process. Focus on that. Money is just a byproduct of the process. As soon as you trade and you start thinking about money, then you will mess up with the process, and you might make big money, you might make a loss, right? And that's of no use. Even if you make money, that's of no use, because you didn't follow the process. And if you don't follow the process, you can't repeat the process. And money can be made only with which consistently when there is a process involved, which is repeatable, replicable, duplicable, delegatable, or it can be used in multiple areas. Now we are talking about Bank Nifty options today, but we can trade Nifty options, we can trade stock options, we can trade commodity options, and all kinds of options. So, and there will be more options coming. There won't be options which are reduced, but there will be more options. As they started with Bank Nifty, and then they did Bank Nifty weekly expiry, then they did Nifty weekly expiry. Now they might do options on stock weekly also, and then the commodity is already started, not that liquid so far, but it will get liquidity, and then currency and everything. It's the more and more instruments are available for you to trade, It's just that you need to master the skill, right? So let's start with this basic concept, and it's going to be very, very simple, right? You might have already understood it from the free videos. And let me tell you one thing. Now you have seen, at least I did 7 webinars before this whole program, and I did like more than 60 videos on Facebook Live on options. So you will see that some of the things are going to be repeated. So I don't have like so many things to teach you in the options mastery program, and I have to give so much also free. Here the idea is to get more execution and more support, plus some new strategies. Of course, there'll be level 2 and level 3. So don't think that, oh yeah, I see this in the free video also, there's nothing new here. It will come. And more important is when I give you the live support and say buy here, and then I say pyramid here, and then you make that 1 lakh rupees in one day or 1 crore rupees in one day, that support is of the crux. It's not about the strategy anymore, right? So I hope you guys understand that part. So let's get started. Level 1, there's a clear-cut strategy. Let's say we are giving an example right now, okay? Right now, this is an example on Nifty, the one which is written on the screen, but you're going to start doing on Bank Nifty from tomorrow with 1 lot minimum or higher if you have a higher capital, right? It will not require more than 10,000 rupees as an investment, and the stop loss could be as low as 2,000-3,000 rupees. In case if you get stopped out, but you still need to learn the process, right? Some money you have to give to the market to understand the process. Some mistakes has to be done. I can't teach you everything here. It's like you expect me to teach you swimming from a webinar that, okay, you go into the water and then move your hand and breathe in, breathe out, and then move your hand. Without jumping in the water, you can't learn swimming. In the same way, without trading, you can't learn trading. I'm giving you the strategy so that your damage is minimum and you learn with smaller capital. And once you learn all the things, then you increase the capital. Most people trade with big capital, lose money, then they lose the confidence and they lose the faith in the market. And then they say markets are gamble, right? So we don't want to do that. So we are going to take Nifty, let's say Nifty current price. This is an example, not the current price right now. It's an example. So current price is 11,000. So what you're going to do is, you're going to track ATM. ATM means at the money option. So 11,000 call and 11,000 put, right? So call and put chart to break above RSI 60 levels in 15-minute time frame. Okay. I will show you a live market. Live means the software also, how to do that. And then in case of a call, you're going to buy the weekly option, which is 11 July, which is tomorrow. Like, let's say the trade happens, I will tell you the other option also. Let's say the trade happens after 3 o'clock or 2 o'clock. Then doing the same expiry won't make sense because just getting expired tomorrow itself. Then we will do week 2, which is the next week, okay? But as of now, we explain you with the help of current expiry. Current means the weekly expiry, which is 11th of July. And in case of put, it will be 11,000 put, 11 July expiry, okay? This is an example. I will show you the current example also on my live software. Now, you are going to watch a 15-minute chart of call and put, not Bank Nifty, okay? Bank Nifty will see, but your trade happens on the call chart and the put chart. So there is a separate chart. Now, where you can see call chart and put chart, if you have the same software like the one which we are using called Market View Terminal, or if you are using Zerodha, if you're using Upstocks, it's a free software. You can just create a login ID password there. Upstocks, you can see free charts of freely option charts. So the trade happens on option chart, not the Nifty or the Bank Nifty chart. Okay, let me be very clear on that. So let's see your option chart looks like this. Option chart, and you see there is 40-60 RSI here, and once it crosses 60 on second last green candle, that candle crosses 60, that candle is called alert candle. What's the word? Alert candle. What's the word? I thought I'm in a live seminar. Okay, you guys are not going to reply to me alert candle, but let me repeat. Alert candle. So that green candle is the alert candle, which means it has alerted us that the markets are trended. Trended means momentum. And when you buy options, you need momentum. When you sell options, you don't need momentum. You need the momentum to be slow. That's a thumb rule, right? Because buying option, if the market goes up fast or goes down fast, then only you can make money. And when you sell options, you need the market to go sideways so that you make more money, right? So this is an alert candle, which is alerting you that the momentum has started in the market, right? Now, I will show the screen. Let's say you have on one side, there's Nifty and Bank Nifty as a price ticker, market going up and down. Then you have the call chart and the put chart. Now, market can go any one direction, either up or down. If market goes up, then the call will go up. If the market goes down, then the put will go up. Let me repeat. Market goes up, call will go up. Market goes down, put will go up. In both the cases, we are going to buy a call or buy a put. But both cannot happen. It cannot, market goes up or down. Either call goes up or put goes up. Both cannot go up. So you're going to take one trade out of it, either a call or a put. So in this case, let's say this is a call. So this is your alert candle, which you see. Now that candle, you'll mark the high low of that candle, the premium price. Let's say the high is 120 and the low is 90 rupees. So 30 rupees is your stop loss, right? So you will enter the market above the high. Once it crosses that 120, that means you're going to buy at 121. Okay, I hope you're taking notes. 121. And you will put a stop loss of the low of the alert candle. I'm mentioning the high and the low and not the body. Okay, so let's be very clear. High and the low. Low is 90 rupees. So that means my stop loss is 89 rupees. So my stop loss total becomes 30 or 32 rupees, right? 32 into 22. Sorry, 32 into 20, which is 6,000 rupees, right? Is it 6,000 or 600 rupees actually? 600 rupees is your stop loss. And your investment is how much? 121 into 20. That means 2,500 is your investment. Am I doing the right calculation? Not used to these numbers. Yeah, I think so. That's correct. When you're too excited, you miss out, you forget maths. Yes, 2,400 is your investment and your stop loss is 600 rupees. Now, I hope because the amount of money you have paid for this program, you can definitely afford 2,400 to do one lot of Bank Nifty. Yes, and your stop loss is only 600 rupees or 700 rupees, including brokerage and all that. So that's your entry. Are you clear on this? Entry and stop loss. So before you enter anything in your life, if you're trading in your life, before you take any trade, you need to know two things. One, the entry, and one, the stop loss. You may not know exit, and you're not know your target. You don't know how far it will go. That's absolutely okay. But you need to know your risk, which is a thumb rule. Without keeping the risk open, oh, let me buy, then we'll see tomorrow, and then we'll see after 2 hours. No, you're not doing that. As soon as you buy, you put the stop loss below the alert candle low. Okay. Now, how do we book profit? Because this is level 1. Okay. This is level 1. I'm teaching you one exit strategy which can generate quick money, right? When we go to level 1, that time we'll talk about pyramiding and all that stuff later. So we make big money. Right now, it's very simple. So let me put you the exit strategy, the alert bar. You're going to buy above the high of the alert bar. If you are buying a call alert bar. If you're buying a put, it will be a put alert bar. So market goes up, you buy a call, and your market goes down, you buy a put. So it's always a buy transaction first and then the sell. That means you are paying the premium and then selling it and getting back the premium with the profit or without the loss. Target 1 is size of the alert bar. What does this mean? So I just gave you the example. 120 and 90 is the range of that alert bar. That means 30 rupees. So 120 becomes 150 is your first target. Now, if you're trading only one lot, take that 30 rupees. That means you made 600 rupees is your profit and enjoy, right? As a start of your options trading career. Right? If you're doing multiple lots, then you sell 1/3 of your quantity. Let's say you're doing 3 lots. So you sell one at one size of the alert candle, which is 30 rupees, Second is two size of the alert candle, which is 60 rupees. So you buy at 120, sell at 120 and plus 60, 180. And then you sell third at into 3 means 30, 30, 30, 90 rupees, 210. Once this is over, that trade is over. You might see that you sold at 150, 180 and 210, and then it goes to 400. And you say, oh, I should have waited. Because you have learned level 1 only so far. This is good enough to get started from tomorrow. You know what, when we used to do options mastery live earlier, because I had to go through a certain pattern, I teach the basics, then other strategies, and then the last day option expiry special comes. And then I teach the level 1, 2, and 3 all together. But here, because you have seen so many videos, you already have access to those membership site and those basic videos. You can already trade option expiry special using simple strategy. That's why we want you to make, ideally my target is that if you have a decent size capital and you should make all the money which you have paid for the program, or you are going to pay if you have paid in installments within the program. That's why I'm teaching you first today. Okay. And still say you are not comfortable, you have not understood, or you're completely new, you are scared to trade options in this manner, or you don't have time to do intraday option expiry special strategy. That's absolutely okay, because later when we go to next session, we'll talk about writing options, which you can do, because there you don't have to sit in front of the screen. You can trade wherever you are in the office, just write the option. It's like a monthly or a weekly income which you can generate by writing options. So everybody in this group will be at different level. So you understand your level, you understand your challenges, and do accordingly. We're not competing with anyone. We don't need to prove anyone anything. Just do your own stuff, right? And the stop loss is the low of alert bar. So this one page has everything. First, you understood what is an alert bar. Let me show. The candle which crosses 60 is an alert bar. High above the high is your entry, below the low is your stop loss, and then you have 3 targets, the size of the alert bar. Now the size of the alert bar can vary. There can be a big alert bar or a small alert bar, so it will be different. And we will learn in level 2 how to deal with all those things. Right now, I want you to get started testing the water. When you want to swim in deep waters, first you need to go into the shallow water like baby pool and test the water. Is it cold? Is it hot? I'm okay? Just get used to it. Do 1 lot, 2 lot till we reach session number 4, which is another almost a month from now. So till then you will have good experience in the market. Okay. So let me show you some examples. Now see this one. This first candle is an alert candle because it crossed 60. And that's above the high is my entry. Below the low is my stop loss, right? And then I keep going up. And as soon as I hit the first target, I'll exit 1, second target, exit 2, third target, I will exit the third target. Then it can go up again, and all that is later. We'll learn that later. Right now is to hit 1 target bhi ho gaya na, it's more than enough right now. Now, let me see first more examples so that we understand better. This is the alert candle here, and this is the chart. These are all recent chart. If you see, this is July PE. This is this month candles. Okay, trading around 500, which went all the way to 900 in this alert candle. Now, if you trade an ATM call or put, then you will not see the prices of the prices of ATM, which we are going to trade, will be generally between 70 rupees to 200 rupees. Generally, that's how it is. So that means even if you buy 1 lot, your investment would not be more than 4,000 rupees maximum, right? And your stop loss would not be more than 1,000, 1,500 rupees. So that's the minimum you can start with. ATM strike prices, the option prices are generally around between 70 to 200. Usually around 100, only 100, 120. Right? If you go and check all my videos, which I did on those 20, I suggest you go and check those videos. That would be your homework. Oh, I forgot. Did I tell you that you're going to have a lot of homework? You have to do the homework, as I think I mentioned. You have to do a lot of back testing, right? And one of the homework is write down till the next class is to watch those 20 trade videos which I did on trading live on Facebook, YouTube, wherever you can find them. It will also mention live option trade, date 4th June, 5th June, 6th June till 28th of June. I've done 20 trades. You watch each of those videos and you'll know why I did this. The same thing which I'm teaching you right now, same thing I did there. Some changes would be there, which I will teach you in session 2 and level 2 and level 3 also. So don't worry about it. So let's an alert bar. Easily the targets are much higher than that. You think that, oh, I should wait for this. I will talk about higher targets later. First, let's get started with testing the waters, right? Now this is enough charts which I can keep showing the whole night actually. You can't stop this. This is what we do day in, day out, right? Day in, day out is what we are doing. Here is an alert bar and the day. Now remember, this trade has to end at the end of the day. Means, let's say you traded tomorrow and you trade, instead of trading the weekly expiry, you traded the next week expiry. So you can even hold till next day, but I would not suggest you to hold. You just exit. Let's say you achieve one target by the end of the day or two targets by the end of the day, you still have to exit. I see some people are still commenting when I instructed that if you put comments in between, I would not be able to answer, and those comments will go up and I would not be answered later also. So when I ask for a question, that time only put questions, otherwise it will go up in the chat box, and there are more than 250 people right now on board, right? So what did I say? Is you have to exit the trade at the end of the day, no matter what. You're not carry forward this trade. This trade is not to carry forward for sure, okay? In case if you have to carry forward, when we are deep in the money, and then we are pyramiding also and all that, which comes in level 2 and level 3, but right now we are not doing anything. Buy after one candle or one target, two target, three target, exit, done. If the targets are not achieved, 3:30 exit and go home and relax, and then come for the next day, right? So this is this kind of examples. We can keep going on and on. So now let me show you. There's a stock chart also here. We'll talk about stock charts later. Right now we are focusing on Bank Nifty only. Only Bank Nifty charts from tomorrow for you, right? Till the next 3 classes or 4 classes. Now let me just go. Now let me just show you what I mean by the chart. Is how do you put up your screen? You can do in Upstocks. I do in my software, which is TickerPlant. Now TickerPlant is a nice software which I'm using since 8, 9, 10 years, but it's slightly not expensive, but it's there, like 75,000 to 90,000 a year, where you get all the stocks of NSE, BSE, futures and options. You don't need BSE, NSE and futures and options. In case if you are interested for this particular software, then you can try to contact at malkanju.com, because we also have bulk IDs we have bought from TickerPlant. But I'm not promoting or selling any software. If you are interested, then only. Otherwise, you can use Upstocks, which is free, or Zerodha, whichever you are using, right? So how do you put your option chart? Okay, so let me put this thing. You will have something like this. Okay, let's say this is Bank Nifty. Let's say if I have to do Bank Nifty is 30,500. So tomorrow is the expiry. So what do? Is I'm going to put, let me put, this is how you, okay, let's get ready for tomorrow's expiry. A lot of action. Bank Nifty, week 1, July. And I want 30,500. This is the put. And then I need the call also, right? Okay. So I will put call here. I'll put here and I'll put call here. And both are, what we see is 15-minute chart. Okay. And then we will start with, we need RSI, right? So we not need a volume. Let's put RSI here. Yes, that's RSI. See, this also by default is what is catching is 70-30. So we need to change that. So if you put here, configure and say 60 and 40, and I don't like black color in life, so I use blue. And that's why we lost to New Zealand today because they were wearing black color. Just joking. Okay. Yeah, let's go blue. And also I can increase the width. So not this one. RSI width. So now you can see this clearly. The 60-40, it's going sideways. So this is my chart for tomorrow. This is exactly what I'm going to do tomorrow. And let's put it this way. Okay, so I need to change those levels to 60-40. So now you have 60-40 here also. I need to do 1 week chart. So now we have enough data, right? So if you can see that both are right now, one is 40 and one is 48 RSI. So both are sideways. Now tomorrow, let's say Bank Nifty goes up, call and put chart are here. When Bank Nifty goes up, the call will go above 60. And if the Bank Nifty goes down, then the put will go above 60, about this 60. If any of those things happen, then we are going to trade them as per the expiry special strategy, right? And it's not a foolproof strategy. It's not going to make money always. It's like you have to put your stop loss. Let's see, here is the trade which happened 2 days back. This is what, Wednesday, Tuesday, and this is Monday. So Monday the trade happened here. This was the alert candle. If you see, this is between 40 rupees. This 40 rupees premium went up to 140 rupees in just 1 hour. This is just 15 minutes, two candles, means half an hour. And then it went all the way to 240 rupees. Now, when this happened, this was not ATM. Right now, both of them are ATM. ATM means what? At the money. And I told you that both of them will be generally in the range of 70 to 200, mostly around 100. See this price 95, price 108. So your entry price will somewhere between be 70 to 120 only, always, right? And then once you enter with the alert bar candle, above the high is your entry, below the low is your stop loss. 1 target, 2 target, 3 target, done, trade over, and then get out. Just get the practice done. Get this practice done. You can do the same thing on Nifty also, but for Nifty we'll talk later. Right now I want to focus only on Bank Nifty because it's only 20 shares lot, and you can start trading as low as 5,000 rupees. 5,000 rupees with 1 lot. So I want you to do this from tomorrow onwards. This is exactly what you have to do. Morning, go to your terminal, set the screen, 30,500 calls, 30,500 put, and whichever crosses 60, wait for the 60 to close. That will be the alert candle. Now let me show you one tweak here. See this green candle. If you can see this green candle today around 12:45, cross 60. But this is the alert candle. But the alert candle high did not cross. So I didn't take the trade. You're not taking the trade when it crosses 60. You're taking the trade when it crosses 60, close above that, above the high of that candle you are going to enter, right? Sometimes what will happen that the alert candle becomes so big that RSI goes from 58 to 70. That means the alert candle is very big. So if you buy above the alert candle, your stop loss will be big and your targets will be bigger. Now in that case, you may use half the candle as your stop loss because it's too big. That candle is more than 50 points, 70 points or 100 points. Then your targets are too big and the time is less, plus the stop loss is big, right? We will address all these things as we go forward. I don't want to bombard with too many things right now. It's just simple thing. Go to the chart, add the money call, add the money put. This is called put chart. This is called, can you see this here? Bank Nifty 11 July 30,500 put. Bank Nifty 11 July 30,500 call. These two charts I will watch till the end of the day, and I will enter when one of the chart will cross 60, and only one can above go 60 because market goes up or down. Both cannot do it. And that I'm going to buy, use the strategy, put the stop loss, put the target, and get started. Now, one last thing before I end this session is that We call it expiry special strategy, right? When I started this, I was thinking about expiry special strategy because usually we think that the markets move big on expiry days, and that is true. But market also moves big on other non-expiry days. Like Monday market was big time, like big black candle on Bank Nifty, 800 points, right? So that was not an expiry day. So the name of the strategy is expiry day or expiry special, but this can be done every single day. Every single day you can do this, and especially if you know certain dates or certain expiries or certain candle patterns, which we will learn in the future, that okay, after this candle pattern, usually the candle is going to be big. If the candle is going to be big, then I should focus, I should sit like an expiry special is going to happen today, and I'm going to trade that, right? Especially like events, like budget, there's a big black candle on Nifty, right? And the next day also there's a big black candle on Monday. So it's not necessary to trade on expiry special on only expiry days, but to trade every single day whenever there is big movement in the market, your trade is on. And in a month, now let me tell you, see, one homework, write down your homework, okay, for the next class, till the next class, is that you watch all 20 videos on, let's say if you even go to this page, that will be easier for you to go, is go to mvoptionexpiry.com. Don't worry, you don't need to register again and pay again. Like usual, I say mvoptionexpiry.com. What I will do is, you can do this, mvoptionexpiry.com, and fill up your name, and here you see the last webinar replay, and you see this one. You click on this, and this is going to give you the YouTube list of all, sorry, it started already. See, this is the list. I did trades, live trades here from, you can see this starts from 20. This is all random, I guess. There are so many trades which I did in this, almost 15, 20 of them. So this all trades you can do, all the videos you are supposed to watch and see how I use this expiry special. It's all 4 minute, 4 minute, 5 minute, 3 minute, 2 minute videos. So 20 videos are there, around 18 or 20 videos. So which will take only 1.5 to 2 hours. If you watch it multiple times, it's great, right? The second homework for you is to, okay, go back to that page, which was mvoptionexpiry.com. Below that, there is like a 1 hour video on basics of option. If you are very new to this, which is what is a call, what is a put, what is strike price, what is in the money, at the money, all those things. So these two things, if you are not clear, used to this thing, then what if you need more motivation, once in a day or once in a couple of days, you watch this, that okay, people have made crazy money here, and get inspiration, right? So if I look at my people in my industry, in the training industry, in the online training industry, are my gurus. So I look at them and say, okay, they now have reached out to thousands of students. They are now impacting so many people's life. They are changing so much of the world, and they are also generating this much money. So I have those people in front of me. I watch their videos. I get inspiration. For you, this is the inspiration. If these guys can do it, all of these guys are common man like you who never knew what is option before they joined the program, and now they made this money. You can watch this video also, right? So this is one homework, and the second homework is you have to trade these trades in the market from tomorrow onwards. Try to do it if you are available, if you are in front of the screen, and you don't need to do every day if you are not comfortable, you don't know, you don't have time. Don't miss your school, college, or office to do all this and get caught by your boss and get fired. First start making money, then after a few months you can fire your boss also, right? So watch videos, watch this video, the replay, which is going to be put on your membership site, so you get the rules again. And watch all the 0 to hero videos which is there in your membership site. If it's not there, it will be done by tomorrow. And watch high performance video, which is on the mindset. Okay, your next class is on, okay, so that completes session number 1.